Hello, everyone. Welcome back to Navalier Market Buzz, episode 26. I'm Crystal Navalier, and I'm joined again this week with my father, Louis Navalier, and of course, Jason Bodner, who is a co-founder of Map Signals. Welcome, everyone. If you have been keeping up, the past couple of weeks, we've been talking about the earning announcement season. We are now in the grand finale, so buckle up because we have quite a bit to talk about. Let's first talk about Domino's.
Well, Domino's is a very well-run company. It has lots of earnings surprises, usually every quarter. Their sales are supposed to be up well over 5%. Their earnings are going to be pushing 9%. We have kind of a quiet analyst community on this, but I'm expecting another nice surprise. Now, this is a big international company too, so we'll see if the strong dollar impacts their bottom line at all. But I'm expecting them to put up a nice surprise.
Yeah, Domino's is a company I've actually owned for a long time. So I got sort of the first big growth bump out of it, which was great. Now it's not as much of a grower, it's more of a established cash cow. It ranks sort of middle of the road in my system, about a 60. This is a $16.5 billion company. I think the real thing I don't love about it is they didn't grow sales last year. They had negative sales growth, but they do anticipate sales and earnings growth to be positive around 5-6% for next year, which is great. They're very profitable and they have plenty of free cash flow. So I think it'll be really interesting to see how they report. Naturally, Super Bowl is next quarter. I'm sure they got a lot of pizza bumps from that, but winter's a cold time. And it's been a particularly cold winter. I think most of the country's in a deep freeze now. So a lot of people ordering pizzas. So I'm optimistic.
Now, do you expect positive earnings from OKE?
Oh, yes. This is, of course, a pipeline company, one of the biggest pipeline companies in America. And they're profiting from the boom in natural gas. And natural gas went over $4 recently because of another cold snap we had. But their sales are supposed to be up over 28%. Their earnings are supposed to be up approximately 25%. We have some positive analysis revisions. So it looks wonderful. One cautionary comp, they don't always beat. They seem to beat every other quarter. So, but right now, the tea leaves have lined up for another beat.
Yeah, this is another one. So scores 55 in my system. That's right in the middle. That's the bad news. The good news is fundamentals are 67% and technicals are 47%. So the share price has been a little bit weaker. So if we do get that earnings beat and higher guidance, I expect more upside out of the stock, which is great. They do have negative 1 year sales growth, but they are slated to grow double-digit sales and earnings for next year. Very profitable company. They've been growing for 3 years. I really like what I see on paper for OKE.
I'm not sure that we can expect the same for Diamondback Energy.
Yes, that's very insightful of you. Well, here's the good news. Sales are supposed to be up 59.5%. Earnings are supposed to be down 28%. This is what happens when you drill for oil, okay? And you have different volumes of energy going through all your pipelines and all. It gets erratic out there, and the analyst community has trimmed their estimates just a tad. So this company, like ONEOK, does have a bit of an erratic earnings surprise history, and I just have no confidence of a surprise here. But this is a drill baby drill stock. It has a nice dividend yield. So, and we do recommend this in our newsletters.
I think it's a similar story in terms of share price. Again, this thing is it's really weak. It's right around 52-week lows. It's been a lot of negativity priced in, and that's because, they contracted sales and earnings for 1 year last year. The good news is they expect sales to grow 41%, but earnings only to grow 2%, which would still kind of put it in the negative growth territory year over year.
With Home Depot being one of the largest home improvement retailers, I'm sure many people are wondering what they're going to announce.
Well, they're supposed to announce sales being up over 12%. Their earnings are only supposed to be up 7.5%. But this company has a very good surprise history. We have minor positive analyst revisions. So I'm expecting it to post another nice earnings surprise. Home Depot does cater more to contractors, and most contractors are pretty busy right now.
Yeah, Home Depot is a stock I've been in for a while now. I enjoyed a lot of upside in it, but right now it's a middle of the road stock in terms of its fundamentals and technicals, just kind of lulling along. Share price, negative 1 year sales and earnings growth. They have a 10% profit margin, tons of free cash flow, but a big issue for Home Depot is they have tremendous amounts of debt, and that's obviously to finance all their properties, et cetera. So rates falling is good for them. That's the good news. The bad news is rates aren't falling as fast enough, so that's not really going to have a major impact in their bottom line. They are slated to grow sales and earnings, but low single digits next year. This is not a growth company anymore, folks. So really, I think what they have to say in their earnings call has more to do with the housing market at large and disposable income and what people are spending on. So it's an interesting report from the sense people use it as sort of a yardstick and a thermometer for where disposable income is going into home improvements. So it'll be really interesting to see what they have to say.
Now, of course, we have to talk about their competitor, Lowe's.
Lowe's isn't as dominant as Home Depot, and their sales, believe it or not, are supposed to go down 1.8%. Their earnings are supposed to go up 3.9. So one thing Lowe's has going for it is its operating margins are expanding a bit. Like Home Depot, we have slightly positive announced revisions and it has a good earnings surprise history. One thing I should mention for both Lowe's and Home Depot, these companies sell a lot of garden items. So, and they have a lot of seasonal hiring when a planting season comes. And because the winter has been so harsh for much of the country, people aren't eager to go out and spruce up their garden yet, especially when the ground is frozen.
That's so interesting. I didn't think about that. Lowe's scores a 41 in my system. Technical, it's weak. So it's, trading down in the lower end of its range, fundamentally right in the middle. Like you mentioned, Louis, they're not as strong a competitor to Home Depot, negative 1 year sales growth, positive 1 year earnings growth, and negative 3 year sales growth. So they really plateaued in their sales. As you mentioned, sales are expected to go down next quarter, but for the full year, they're expected to grow 1.3%. So really not a lot of growth to talk about there. And the share price has risen 100% in 5 years, which has outpaced Home Depot, which was up 62%. So, unless there's major positivity, I would expect more downside than upside from Lowe's.
So I'm sure everyone has been doing their taxes recently. How might this impact Intuit Incorporation?
Well, Intuit, of course, is the founder of TurboTax, and you may know the Intuit founder is our neighbor in Reno. Their sales are supposed to be up 13.1%. Their earnings are forecast to be down 2%, but we've had slightly positive announced revisions, and this stock has a very good earnings surprise history. And Intuit does a lot of good accounting software. It's getting better and better all the time. So I would expect this company to surprise.
So Intuit, this is a stock I've owned for a long time. I actually like setups like these. The stock is ranked at 48, and that's because of very weak technicals at 29%, trading down near its lows. Fundamentals for Intuit are stellar, 75%. So 1 year sales and earnings growth, solid double-digit percent. 3 year sales and earnings growth, the same. They're looking at an 18% profit margin with plenty of free cash flow and expected sales and earnings to grow 14 and 12% respectively each for next year. So it's still a growth story. It's kind of petered out a little bit in terms of its growth acceleration. The shares are up 90% in 5 years. I expect that trend to continue. I think it's a great company. And there's, with a setup like weak technicals and strong fundamentals, again, a surprise is just rocket fuel for stocks like that.
So Sezzle, I know, was one of your favorite stock picks of last year. What are your expectations for them?
I'm expecting them to blow it out again. The last quarter, not only they beat, they got it higher. This is a payments company. There's a certain part of our population that can't make ends meet, that are struggling with making their payments, and they offer payment plans actually at the stores when you're about to buy. You want to pay 4 times, you want to pay monthly, and they do charge you a pretty penny for interest on this too. They were also attacked by the short seller Hindenburg, which of course is not in business anymore. And I think Hindenburg was just trying to prick their bubble, because I know one week they're up 174%. But this company has very strong analyst revisions under it, and we are expecting a major earnings surprise. So hang on, enjoy the ride. This is a volatile stock, but it's one of my most powerful ones.
Interesting. Yeah. So BNPL, huge space, competitors like Klarna, et cetera, things like that. Sezzle scores about a 57. Could be worse, could be better, a little higher than middle end of the range. Really small company, like you said, Louis, just shy of $2 billion, which contributes to its volatility. You're looking at positive 1 and 3 year sales growth, which is great. 3 year earnings growth is negative. I don't really love that. However, 1 year sales estimates slated to grow 33% and 1 year earnings slated to grow 29%. So those are really high expectations. Should they come in and beat, like you said, they have a strong history of doing so, that would be great. And it might even impact their small but growing profit margin of 4%. So I'm eager to see what happens here with Sezzle.
Now, Salesforce, I don't think that we can have a similar expectation for.
That's very good software, and they are extremely popular in the business community. So I wouldn't give up on them yet. Their sales are supposed to be up 8%. Earnings are supposed to be up 14.2, so that's good. Analysts have trimmed the estimates just a tad, and they did not surprise last quarter. So their goal will be to surprise this quarter, because once you have 2 quarters of disappointments, everybody's going to start ignoring you. So this is a company, again, good organic sales and earnings growth, margin expansion, but for some reason, them and the analyst community got to work together a little bit better, and hopefully they'll eke out a surprise. I don't have this under management right now.
I gotta agree. I own this stock in a publishing portfolio. I've been following it for a long time. It ranks 60 in my system. What's punishing it is technicals, sort of middle of the road technical scores. So the share price hasn't really been strong, but fundamentally, wow, this stock leaps out on paper. It's a $310 billion company still with strong growth momentum. 1 year sales growth of 11%, 1 year earnings growth was off the charts. And same for 3 year sales and earnings growth, just shocking high growth. They bank a nice profit margin at 12%. They have plenty of free cash flow, and they're slated to grow earnings almost 12% next year, full year, and 9% for sales. So, for a major software company, behemoth like that, it's also a strong commentary on the companies that they service, keeping customer resource management tools for so many large companies, large major players, S&P 500 companies. So what they have to say is additional commentary to just what their earnings situation is, but historically really strong. And like you said, Louis, I hope they beat this quarter too, because they missed last quarter.
So Vistra Energy is one of the largest power producers, and fun fact, they almost have a third of all Texas electricity consumers. So very curious to hear your thoughts on them.
Well, when you provide independent energy like Vistra does, you do root for extreme weather. So they want freezing cold winters, which they've had. They have been popsicles in Texas for a bit, even down in Houston. And then you want a hot, miserable summer, when Texas is pretty good for that. So as long as they have the extreme weather, they get to sell them electricity at a premium price. And their sales are supposed to be up 13.2%. Their earnings are supposed to be up a whopping 600.5%. The analyst community 90 days ago was estimating 8 cents a share. Now they're estimating $1.01 a share. So in the last 90 days, they've revised their earnings estimates like 12-fold higher. So this is how weather impacts energy consumption. And because this is an abnormally cold winter and we have high natural gas prices, and this should be perfect for Vistra. Now, with that said, they better surprise. They did surprise last quarter, but they don't always surprise.
Yeah, that's a great setup for a stock like that. Utilities companies, power supply companies typically are strong dividend payers. This one is still in growth mode, so it has, an okay forward yield of 0.5%. Nobody's getting rich off of that. What's interesting is they do grow their dividend. They grew their dividend last year by 13%. So, you're talking about significant dividend growth over the years. What I don't love about it is negative 1 year sales growth, negative 3 year earnings growth, substantial. They're slated to grow earnings next year 21.4%, sales 11.8%, which is great. And they have a nice profit margin, but it is in a volatile space. So again, it's pretty small when it comes to utilities companies, 57 billion. That's a nice sized company, but they're much larger out there. So you can see this stock move substantially, and I would love to see a beat as well because it has a nice setup. That said, the technical score is much higher than the fundamental score in my system. It scores a 65, 76.5 technical. So it's really strong at the top end of the range with mediocre fundamentals. So I'd like to see strong reports to bolster that fundamental score and sort of justify the technical strength.
Yeah, we've owned Vistra for some time in managed accounts. So it's been one of our big winners.
Yeah, the stock's up 646% 5 years. So
yep.
It's hard to argue with that.
And finally, we have to talk about Nvidia.
Well, that's the grand finale. And I know Costco, and there'll be a couple other stocks announced after Nvidia. But hopefully it'll put a nice candle on this earnings announcement season, which has been much stronger than we anticipated. We've got sales running over 8% on the S&P. Earnings are running over 16%. And with Nvidia being the grand finale, their sales are supposed to be up 72. Earnings should be up 64. I think Nvidia's guidance is more important than anything. Also will be influencing Nvidia will be one of its biggest customers, Supermicro's results on Tuesday, because they have to report their financials on Tuesday. Otherwise, they risk getting delisted. Supermicro is the best performing stock this year. And I think some of it might be a short squeeze, but there's no doubt that Nvidia is taking over the world and the demand for their chips is unbelievable. So their guidance will probably be more important than their excellent results.
Yeah, Nvidia, I've owned this stock for a long, long time, and I don't see any reason to let go of it myself. They're best in breed in chips. The DeepSeek missile attack, proverbially speaking, on Nvidia a couple of weeks ago, it really didn't do much. There's still over a year backlog of orders for their chips, and they just have newer and more demand every single day. The growth metrics are off the charts. I don't even need to mention them. Just phenomenal, phenomenal growth, 49% profit margin. The hard part about Nvidia is there is so much optimism built into this stock every earnings report, and they keep coming out and beating and raising. So I would love to see that trend continue. But yeah, there are not enough good things to say about this company. The share price is up 1,700% 5 years. Everybody knows it. At this point, everybody's exposed to it in the broad-based indices too. It's just a magnificent stock. So I'm really excited to see earnings.
So just to clarify, Nvidia is by far my largest holding. I haven't trimmed it for 5 years, so it overpowers our portfolios. But Jason, since you're an expert in options, can you explain to everybody, I think 42% of our options are now daily. So doesn't the option market sometimes jerk Nvidia around so the tail's actually wagging the dog?
Absolutely. Especially with daily options like you're talking about. I think it's really important to know that mostly professional traders are the ones who make money on daily options, and almost invariably you make money off of selling options, not buying them. At least the probabilities are skewed just logically in your favor. It's better to earn the premium than to pay it. But with that said, the professional options traders are going to seek the most liquid options markets to get in and out of, and there are hardly any more liquid options markets than Nvidia. It is the bellwether stock. It's heavily traded. So traders do all sorts of shenanigans around options, trying to push the stock price in and around the exercise price of the option. So maybe it expires in the money and the trader can win their bet, or it expires out of the money, trader can lose their bet. So options definitely distorts the daily volatility of stocks heavily, especially a stock like Nvidia. But that's why you need to look sort of longer term, like you've owned the stock for 5 years, as I have too. I bought it in 2017. And those daily fluctuations of volatility don't look like much on a 5-year chart, but every day where you're seeing big moves like that, which can be impacted by options trading, it can be a little bit of gut wrenching. But at the end of the day, it's part of the noise.
So what I've noticed, not to be a buzzkill here, but what I've noticed is that the professionals are writing so many covered calls on Nvidia that if it does try to gap up, they'll hit it with a mean reversion program or something, just because they don't want to fulfill the premiums they just wrote. They just want to pocket the premiums, not deliver the stock. So, don't be upset if Nvidia doesn't go up after its earnings. It'll go up the next day.
So now let's move on to subscriber questions. What on earth is going on with Powell?
Its forecasted sales and earnings are great. They help build out the utility grid, the oil service industry. But when you're a small cap stock, you sometimes after earnings season, you have to burp, and it's definitely burping. The other thing is its earnings momentum is decelerating, but the actual sales and earnings are stunning. So I'm sticking with Powell. We got positive ounce revisions. This is just what happens when you go to the small cap arena.
Yeah, I mean, Powell Industries, there are a few stocks in my system that scored better on a fundamental basis. Even though it's a $2.3 billion company, just stellar 1 and 3 year sales and earnings growth, a massive profit margin, and strong sales and earnings growth slated for next year. So it's just a major growth engine. Exciting stock for sure.
Our subscribers are also wondering about CRNT.
CRNT is a network stock, and it missed by a penny. And their guidance was good. Their forecast sales and earnings are good, but that penny miss made the stock lose its mojo temporarily. So when a stock like that gets hit, you have to wait for the volume to dry out. And because it's a small cap, it might take a few weeks.
Yeah, it's a $300 million company with just phenomenal growth metrics, huge sales and earnings growth, a lot of optimism priced in. So if they fall short in any arena, they're going to hit the stock, which obviously they did. It's down, 25% in the past month or so. But the stock's up 72% in 5 years, $300 million company. If they keep hitting on these growth metrics, I expect the stock to resume higher.
And lastly, one of our subscribers wanted to know what your thoughts were on Nebius Group.
Well, they just announced their fourth quarter results. Their sales were stunning. They were up 466%. That's the good news. The bad news, their operating earnings are still negative. They're less negative than they were a while ago. So you can argue they improved 55% because they lost less money. But this stock will not be on my radar till it earns money. And so it's not in our portfolios at this time.
Yeah, I kind of have a similar view. It scores a 65, which is a nice score, respectable in my system, but 85 technical, 37 fundamental. I don't really like to see stocks that are trading really high on hype story, optimism. I like solid data. The data for the fundamentals very mixed, positive 1 year sales growth, negative 1 year earnings growth. The same goes for 3 year earnings growth. just ekes out a 2% profit margin, but earnings are slated to fall 27% next year. So with thousands of stocks out there, why not pick the best of the best? This is not the best of the best. I'm passing on NBIS.
Now, please explain why Palantir, which is one of the best performing stocks, had to sell off.
Well, it sold off for two reasons. One is its president. He's a colorful guy. He's selling at 1.2 billion of stock, and that hit the stock. Also, the Defense Department wants to cut back on some of its spending, so that hit it. And finally, I would add that Peter Thiel is one of the founders of this company, and he said he was going to sell $1 billion of the stock. Now, this was out of the S&P a while ago, and I don't know when Thiel sold his stock, but Thiel lives in Los Angeles, and I assumed he'd probably sell it this year, but sell it from his Florida address, so he doesn't have to pay as much in taxes. Because otherwise, he's going to owe, over 130 million in taxes to this great state of California. So you got two big sellers in this stock, and that kind of pricked its bubble. I would add that its sales are forecast to be up 37.7. Its earnings supposed to be up 60.6. Positive analyst revisions, massive surprise. It is a darling. It is a theme stock on Wall Street.
So I agree. The stock is great, phenomenal sales and earnings growth. There's little bad to say about it. Ultimately, you bring up great points about potential insiders selling, but a year ago, this stock was $23. It hit a peak of 124, and even with the recent sell-off, it went down to 112. Let's not forget January 30th, this stock was around $81. So it rallied nearly 50% in just a couple of weeks. So I think it's entirely normal to backtrack a little bit.
So Walmart is quite the interesting one because they did beat analyst estimates, but why did they issue a cautious guidance?
Well, I think they're probably trying to manufacture their next earnings surprise. When you get to the size of Walmart, it really is hard to surprise. So they're not the only big company that lowers expectations. But the fear, of course, is that they see something in the consumer that maybe we don't see. And there's some signs that consumer spending might be sputtering. Now, we thought the bad retail sales report in January was mostly weather related. The fires in LA, the big freeze for much of the country. So we shall see. But it looks to me they're just trying to manufacture another earnings surprise. Stock's a phenomenal buy here near term. We own the stock.
It's a great point. When you get to the size of Walmart, $835 billion, how much growth can you expect? That said, last year, 1 year earnings growth was 26%, and they're slated to grow earnings next year 11.2%. So there is optimism built into the stock. Maybe you take the analyst community expectations pegs down a little bit, but it's just a bellwether. It's going to do what it's going to do. So it'll be really interesting to see if they do indeed come out surprised next time.
So there's quite the drama between President Trump and the Ukrainian president. How is this going to impact the peace negotiations with Russia?
Well, it's very clear that the negotiations are between the U.S. and Russia, and Ukraine's going to have to take it or leave it. And obviously, what President Trump said about President Zelensky at a tech conference in Miami was way under the belt. He accused him of being a dictator and, sending his people to their death, wasting $350 billion in aid from the U.S. Obviously, our allies are not happy with us, okay, especially Britain, which just granted a 100-year partnership with Ukraine. But, President Trump has spoken. He wants this settled. So apparently the settlement is going to be, number one, declare a ceasefire. Number two, have free and fair elections. Number three, sign the agreement they give you. And not only is President Trump jamming Ukraine, he wants to extract 500 billion of resources out of them, mostly through U.S. companies. If you go back to the Gulf War, we didn't get reimbursed for what we did. And Trump at that time was calling, we need to get the oil, we need to get paid. So this is a new precedent that the U.S. wants to get their money back. So this is going to be very, very interesting. But yeah, our allies are just baffled because they've been left out of the negotiations.
Well, one thing's very clear. I mean, this goes back a long time. A Democratic administration really pushing for Ukraine to potentially be part of NATO, encroaching further into Eastern Europe and getting right up against the border of Russia. Biden was a big backer. He's no longer here. Trump made it very clear where he stands. So, I just find it fascinating that his hand is being forced. Like you said, sign the deal that they give you. He has no other options at this point. So it is interesting. One could say his hand is being forced unfairly, but it doesn't really matter. What is good for the country, or the globe, is to put an end to these global conflicts. And Trump is trying to do the same in Israel and Gaza, trying to be the big peacemaker with a big baseball bat.
How significant will the German election be?
Monumental. Obviously, if the AfD party prevails, it will be an earthquake heard throughout Europe. This is a libertarian party. They want to turn the nuclear plants back on so Germany can maintain its manufacturing business. They want to restrict immigration, which Germany is not able to do now because of all the EU rules. And finally, they'd like to trim some taxes. The existing political parties in Germany have said they will not work with AfD, but the AfD gal, she's an ex-Goldman Sachs gal. She's very well spoken, and she struck a nerve. So we want to see if she becomes the equivalent of the next Marie Le Pen. Marie Le Pen controls the French Parliament, and we just want to see how what happens. But if Germany goes back and to has a ruling coalition that ignores her, I think it's not a good precedent at all, and they'll be probably forced to have another election soon.
Now let's switch over to economic news. Do you expect that the consumer confidence will improve on Tuesday?
It better. That's the Conference Board report, and it did have a pullback. And if it continues to pull back, then there's definitely something wrong with the consumer. We think the pullback was due mostly to seasonality, extreme weather, fires in LA. So if we get 2 months in a row of it contracting, GDP estimates will be revised dramatically lower.
Now, what about the durable goods report on Thursday?
Well, Boeing really distorts the durable goods report, but we did have the manufacturing sector pick up in January, according to ISM, first time in 26 months. So I'm cautiously optimistic on the durable goods report, but we're going to have to back out the transportation sector and look at the core goods, and that'll be more meaningful.
And finally, what about the PCE report on Friday?
That's a big deal. We think it's going to be very good because a lot of the PCE components were in the PPI report, Producer Price Index report. And of course, PCE is the Personal Consumption Expenditures Index. It's the Fed's favorite inflation indicator. The Fed has removed its official inflation target, but if the core PCE improves or just stays flat, I think that will be very welcome. And then we'll finish the week on a very positive note.
Well, thank you to you both for answering all my questions. And thank you to you all again for liking, commenting, subscribing. Don't forget to hit the notification bell to know exactly when we post videos on Sunday. Also, a huge thank you because Louie's new book, The Sacred Truths of Investing, is actually #1 for bestsellers in business finance on Amazon. So thank you all so, so much for your support.
Yes, we do want to thank you very much. This book was a labor of love. Me and Jason write every week for Navaler Market Mail. So does Gary Alexander, who's an historian, Brian Perry, who's our dividend expert, and Yvonne Marchev, who's our international expert. And the whole purpose of this book is to educate you on the market and talk about all the curveballs that come and go on the market. The markets aren't always efficient, okay? I personally think they're efficient during earnings announcement season, but that's only 4 months a year. The other 8 months are mean reversion. So there's a lot of little games being played on Wall Street. And if you read this book, you'll be much wiser and you'll be able to have more staying power and you'll be a better investor. So thank you again for buying the book. We really appreciate it.
And of course, the link will be in the description below if you'd like to purchase it. But until then, thank you so much. Thank you so much, Jason. We will see you next week for a new video.